We are awaiting the GDP numbers, should be due any time now. Our own expectation is that it should come in at 7.4%, no, 7.5%, the GDP number, and the GVA average, the gross value added average, is expected to come in at 6.8%. At 6.8%, it would be a fall, and gross value added is now the more important number that economists are looking at. As we have been telling you from the word go, we have Shubhada, the chief economist from Yes Bank, with us. Soumya, Ghosh, the chief economist from SBI, is also joined us, and in a minute we'll also have Sajjid Chinoy of JP Morgan joining us. Well, that's the star cast. We have Ananth Narayan of Standard Chartered Bank is also waiting by for the numbers. Soumya, your call on GDP and GVA?
I think the GDP numbers could surprise on the upside.
Okay, we've got the number. I'm really sorry, Soumya, just coming back to you in a minute. The GDP growth has come in at 7%, so that's quite a bit of a disappointment, though it won't be a disappointment for Shubhada because her call was 7%. So this is quite a steep fall from the kind of levels that we had got. Shubhada, for your information, we had you at 7%, and probably only Madan of ICRA at 6.8%. Otherwise, just about everyone was at 7 to 8%. The GDP coming in at 7% would be a bit of a disappointment. We still have to wait for the GVA numbers, which would be much more important. Still awaiting those numbers. Well, we have got the manufacturing output coming in at 7.2%. The farm sector is at 1.9. Now, that's actually better than the consensus I got, because agriculture was not seen more than 1% by most people. So the farm sector is not actually bad. The manufacturing sector coming in at 7.2 also is quite positive. We are still awaiting more numbers from the GDP. As always, the PIB website is not obliging just at this point in time. So let's wait for the numbers to flash by. Those are the breaking news coming up for you. GDP growth coming in at 7% against widespread expectations of 10.5%. That would be seen as a bit of a disappointment. But we still have to get the GVA number, which is the more important number that people are watching for. Mining and quarrying grew at 4%. So at 4%, that would be a little lower than the 4.3% year ago. So 4% is, manufacturing has come in at 8.4%. That's exactly as it was a year ago. So manufacturing, not a bad number, you will have to say. On a decent base of 8.4, it's come in again at 8.4%. Power, that is the one that's given way at 3.2%. Last year it was double digits at 10.1%. So electricity is the one that's letting us down. That's electricity and gas, both those numbers bad. Now comes the big boy from the services sector. Trade and hotels has grown comfortably at 12%. So no complaints over there. 12.1% was how much trade and hotels, transport and communication. This is 25% of the GDP. It's a huge boy. Everything from your tailor to your Udupi hotel to your cell phone guys are included in this trade number. That's grown well at 12.1, you will have to say. Finance, insurance, real estate, not bad actually at 8.9%. It's lower than the 9.3 in the previous year, but that was to be expected. After all, loan growth has been a dismal 8.6%. So finance, insurance, real estate has done okay at 8.9. And then you have manufacturing. This is coming in at 7.2. I'll have to wait and see whether there is a mistake in the manufacturing numbers. This says 7.2. There was one 8.4 number as well. But we will come to that in just a bit. We've got most of the numbers, which is that the farm sector output is at 1.9. I'll come back to the manufacturing. There are a couple of numbers here. I get one number at 7.2. Let's wait and see what the manufacturing number is looking at. This is agri growth at 1%. There's no confusion about that. Okay, manufacturing is at 7.2, so that 8.4 number was wrong. 7.2, and I think electricity again at 3.2 is a disappointment. Mining at 4% is same as what we did year ago. We are still awaiting construction. That's not come in just yet. But we have sufficient data to ask our experts what they have made of the number. Well, construction has come in at 6.9%. Okay, so that's not a bad number. We had 6.5 year ago. And trade, of course, at 12.1 is a very good number. We are still awaiting the GVA number. But Shubhada, first quick comment.
Yeah, I think broadly GDP number is absolutely spot on, but it's always a confusion and a handicap that we work with. GVA has come in at 7.1%, as I understand. The big surprises are clearly on the agriculture side, Latha, because a lot of us were expecting a contraction in this sector, particularly the unseasonal rains as well as the delayed monsoon. All put together, we were looking at agriculture in a contraction zone, but very clearly 1.9% is a surprise on the upside. The construction sector also has been, on a significantly higher upside of almost 2.5%. But otherwise, broadly, the manufacturing, mining, and financial sector and transport, I think, pretty much in line with what we were anticipating. But yes, we were anticipating GVA at a much lower number, which was at about 6%. Quite clearly, the googly is net taxes on products.
Okay, we'll have to wait and see for that, because the GVA number is still not out. We have to wait for that. What we have, I think the economy grew at 7%. I would assume that's GDP. So we have to still wait and see where the googly is. At this point in time, I can't see how you can arrive at a 6% GDP with the numbers looking fairly good on several factors, on agriculture, on manufacturing, on services. We have to wait and see where the miss has come. Soumya, you want to take a stab at this? I'll just read out the numbers. Sajjid also has joined us. Very quickly, agriculture has come in at 1.9%, mining is at 4%, manufacturing has come at 7.2%, electricity is the dismal number at 3.2%, construction 6.9% is better than the 6.5 year ago, trade has come identical, unchanged at 12.1%, financial sector has come in at 8.9% versus 9.3%. I don't still have public administration with me. Soumya, first thoughts?
Yeah, I think most of the numbers are in line with the expectations which we had, but I think the difference lies in ultimately boils down to the taxes net of subsidies. I think that has played a spoiler, because if the GVA numbers are over there, which we are quoting at 7.1%, that are also very close to our estimates, but the GDP number at 7% lower than GVA means actually there has been some sort of subtraction from the GVA number. So that, I think, is a matter of surprise to us, because we were expecting a big number from that side, because the indirect taxes have grown at 38%, subsidies have actually declined by 2.5%. So there was no reason to believe that why the GDP number should come lower at GVA number. Possibly the impact of that tax collection may not have been factored into that Q1 GDP numbers.
So the impact of tax collection would not have been factored in, or the amount of tax collected would have been low, and hence you are not expecting a big difference between GVA and GDP. Is that right?
Exactly, because the subsidy numbers are actually negative. Our estimations show that it is actually a decline by 2.5%. So net effect would have been added on to the GVA number. But in hindsight, it shows that it has not been, and the impact between GDP.
Okay. All right. Soumya, we'll come back to you in a minute. Sajjid, your first thoughts?
Hi, Latha.
Actually, your first thoughts in the sense, is this a good or a bad number? Now I'm confused.
These numbers are nothing if not surprising. I think if the GDP MP number is 7%, that's quite a disappointing number, because ultimately that is the size of the pie. We can talk about GVA versus indirect tax collections. That's just how economic activity is divided up between the private sector and the public sector. But actually produce is GDP MP. So if this is 7%, this would be a big disappointment. And frankly, I'm flummoxed on a couple of fronts. One is that if in fact GVA is 7.1, then that is quite close to most estimates. We were at 7.4. But as Soumya was saying, this is the quarter in which indirect tax collections were actually very strong, even if you net out the tax hikes, both on services and on excise. And this is the quarter in which subsidies were very low because of lower oil prices. So you'd expect that the net transfer to the government is very much positive and would add to GVA. The fact that it's subtracted, frankly, is quite boggling. So if the number is 7%, that is a disappointment.
Okay. Can you derive the GVA from this? Not possible, because we do not know the subsidy number.
Well, to get the GVA number, we need public administration. And from all that you're telling me, I think public administration should be quite weak. I think there are two sources of uncertainty here. One is last quarter, it was just 0.1%, and most people thought it would be between 5 and 6% this quarter, given the growth of revenue expenditures. So my sense is that number itself is lower, which is an intertemporal spread of government spending. But beyond that, I think the uncertainty exists on how much of indirect tax collections versus subsidies has been accounted for in this particular quarter.
Okay, well, I mean, this is, as always, the PIB website playing fraud, so we will try and get you the public administration number as well as the gross fixed capital formation number, the final consumption expenditure. But broadly, would you, Sajjid's view is that it is a disappointment. Shubhada, would you agree this is, as a number, is worse than what the markets were prepared for?
Definitely. I mean, at our own end, of course, we were looking at a 7%. But broadly, if I look at the detailing of the numbers, it's quite disappointing because a lot of things are just not adding up in terms of, what Sajjid also alluded to, in terms of indirect taxes and less subsidies. One would have looked at a much higher support through the net taxes on products. Clearly, a lot of arithmetic is not getting explained fully, and that is what the disconnect would be in terms of, our quarterly forecast hassles that we have at this point in time. Because
we can at least say that this is better than the fourth quarter, because in fourth quarter we had a GDP number of 7.5, but a GVA of only 6.1.
That's right.
Are we at least doing better than the previous quarter from the numbers?
The value-added activity, we are definitely doing quarter over quarter better, because as you said, we were at about 6.1 and that has come in at about 7.1. So clearly there is some traction. But once again, it's more important to look at what the overall GDP is, and that is quite disappointing. Not in terms of what we expected, but overall in terms of what the momentum is for the growth.
Okay. Ananth, really, I mean, I'm sorry I'm not able to help you much in terms of the overall numbers. All that we have now is that the overall GDP number is 7%. Our poll had thrown up 7.5. But on most counts, agriculture, mining, manufacturing, construction, in most counts, the numbers have come, if anything, a tad better than expectation. I think public administration is the one number that should be bad, but we don't have that number yet. Is there any response at all for the markets from all this?
Well, Latha, I think we'll have to wait for some clarity, and I tend to agree with both Shubhada as well as with Sajjid. 7% headline for GDP is a disappointment. We were closer to at 7.5%, as you said, the consensus numbers, and there were people expecting 8% plus as well. But the funny thing is, as you mentioned, the components are all actually positive. We were expecting -1% on agriculture, and we've got plus 1.9%. Mining and quarrying, manufacturing, all of these are good numbers. Construction at 6.9%, frankly, is a positive surprise. We were expecting closer to 3%, given that, you had decent rains in June. You're right, public administration is the one number you haven't mentioned as yet. But overall, the components look pretty positive. I think overall, the momentum and the fact that we have some green shoots is probably being reiterated out here. And frankly, agriculture, which was the one area which was seen as a weakness, rural wages and all of that, that is probably a silver lining and a positive out here if it's plus 1.9%. So the underlying picture remains one of green shoots, of things getting better, government spending coming through, reinforced by the fact that the fiscal deficit data today also reinforced that. But yeah, the headline number, frankly, is puzzling.
Okay, finally I have it. The press release has opened. Public administration has grown at just 2.7%. So that clearly was a disappointment. It was bad last year, same quarter. See, public administration, I should mention the whole thing. It's public administration, defense and other services. It includes the money that the government spends on schools, colleges, public health. One thought that last year, same time, there was no government. The government won the elections on May 16th. It took office on May 26th. And by the time the ministers were appointed, it was the 1st of June. They really had only 1 month to speed up any expenditure. On that low base, we should have done better in public administration. Coming in at 2.7% is quite a disappointment. And that actually mars everything. Otherwise, let me read out the comparisons to you. Agriculture versus 2.6, we have done 1.9. Not bad, considering that the Rabi unseasonal rains were always expected to give even a negative agricultural number, according to some people. Mining and quarrying has come at 4 versus 4.3, not bad. Manufacturing has come at 7.2 versus 8.4. Okay, but that's still a small percentage of the entire GDP. Electricity has come. That's the disaster which was always known. 3.2%. compared to 10.1. So we better get our Discom act together. Somebody is not buying, generation is happening. Construction at 6.9 is better than 6.5 last year. Trade, hotels, transport and communications at 12.8 is much better than 12.1 last year. And that's 25% of the economy growing at a 12% pace. Then financial, insurance, real estate has grown at nearly 9%, 8.9 compared to 9.3. Not a bad show. It's public administration that's let you down, and that's created this 7.1% number. Now that you have that number, Sajjid, any thoughts on whether this is good, bad or ugly?
No, I think, Latha, we should recognize that ultimately the size of what all goods and services are produced in India is represented by GDP at market prices. The distinction between GVA and indirect tax collections is just how that activity is distributed among the private sector and the public sector. So we have to look at the fact that last quarter GDP was 7.5%. This quarter it is 7%, and therefore that would, be a deceleration. The only silver lining out here is what you mentioned about public administration, which is that people thought that there'd be much more front loading of government expenditures, and therefore that number would be higher. The fact that that number is lower perhaps means from an accounting perspective some of this will be counted in subsequent quarters, and so you would expect to see some of the lost growth, so to speak, in this quarter being captured through higher public administration in subsequent quarters. But that said, I think we can focus on individual components, but GVA is only part of the picture. A GDP at market prices is how we should be looking at economic growth, and that has slowed and is below expectation.
Okay, I think now I have that number as well, Sajjid. The GDP, according to expenditure, would come in at 7.0%, and GVA comes at 7.1%. So now we finally have that number. The GVA at least is better than the GDP. So the taxes, googlies, have not harmed it too much. I also have now the capital formation number. That's come in at 4.8%, all of you. And public final consumption expenditure is grown by 7.3%. So both those numbers don't look too bad. Any thoughts, Soumya?
No, I think, as you have just pointed out in terms of and Sajjid was saying in terms of the number distribution, if I look at the nominal GDP numbers, so that actually is a reflection of the true sense. But some of the numbers are still perplexing to me. For example, I just found out that the GVA deflator is actually positive at 0.1%, which was negative in last Q4.
Okay.
So I think there is no reason
was
to
positive at how much? How much is the deflator?
First quarter. It's 0.1. It has turned from minus 0.1 to 0.1.
Okay, I might as well add.
For market prices is actually at 1.7.
Okay, that's also giving the nominal GDP a higher number. We were wondering whether at long last you may get a nominal GDP which is equal to or even lower than the real GDP. Nominal GDP has come in at 8.8%. So a little bit of inflation has been admitted. Clearly the GDP deflator is not quite the WPI. It's a little more than the WPI, because if you took the WPI as the deflator, then you would have got a negative number. Okay, well, I think now all the numbers are on the table. Soumya, just tell me, is it good, bad or indifferent? How should we read it?
What did you say?
Do you say these are good numbers or are they bad numbers?
No, I think the numbers on hindsight doesn't look good, because even if we are assuming that the nominal GDP 8.8%, so that means that opens up another front of basically problem on the fiscal front, because from a nominal GDP growth of 11.5% in the budget, so 8.8% now, that means that it will make the fiscal deficit target a little more difficult and challenging than what we is looking at currently. So that is one angle which needs to be looked into.
Okay, so it's problems any which way you look at it. Shubhada, last thoughts. Is it a good number, bad number?
It's not a good number, definitely. Going forward, we all really need to see whether all the capex that is being engaged into by the government, is it really going to translate into a much higher numbers, both at GVA and at the nominal and at the value-added GDP levels in the second half, which we believe they would. So overall, we are still looking at a 7.8, which perhaps is slightly lower in terms of consensus, but what we believe is still an improvement of about 50 to 60 basis points compared to what we saw last year. And it's essentially because your net exports will still remain negative, and your personal consumption is going to be muted. So I think all eyes would be on GFCF on the part of the government, and that's what will add to the GDP numbers headline.
Just a little while ago we were celebrating that the government has probably spent, because the April-July government expenditure number came at 6 lakh crore, which is 34% of the full year's expenditure. But in June, it doesn't look like to have been very good. The the government final consumption expenditure has risen by only 1.1%, and public administration, like we just said, has risen only by 2.7%. So lo and behold, the government has not spent, which is why we have not seen too much of a traction in the economy. Sajjid, those were the three final numbers I had. Private final consumption expenditure has gone up by 7.3%. Government expenditure has gone up by 1.1%. Capital formation by 4.8%. Final thoughts?
Well, just that I think, as you mentioned, the number is disappointing, but because it's being led by an intertemporal shifting of government spending, maybe there'll be some catch-up later this year once government consumption picks up. I think on the private sector side, there is some good news here, not only in the GVA, but if you look at consumption and investment, there is a cyclical pickup out here, and I think that's, in a way, expected given the massive terms of trade shock India is experiencing. With oil prices collapsing, that increases disposable income, that increases corporate margins, and that should result in higher private consumption and higher investment. And you're seeing signs of that in the high-frequency data and the GDP data. So I don't think it's all gloom and doom. I think, in a way, it's slightly disappointing, but, I think the new GDP series is nothing if not puzzling. And I think today's data point has compounded that, because for me, the biggest question mark is the translation from GVA to GDP. I think most people expected GVA to be in the 7% range. Everybody had, I think, expected MP to be much higher because of the net indirect taxes minus subsidies, and that for me is the big surprise. So we'll dig into the numbers and figure out where the source of the uncertainty is.
Absolutely. The fact that there is no difference. I mean, I'll just explain what is puzzling me, and I guess that's what should puzzle everybody. Last quarter, in the fourth quarter when we got the numbers, the difference between the gross value added GVA and GDP was 1.4 percentage points. GVA grew at 6.1 and GDP grew at 7.5. And all of us were therefore prepared that there will be at least a 1 percentage point difference. Lo and behold, you have the same number. GVA grows by about 7.1, GDP grows by 7%. So there is a complete confusion on how much his taxes grown and how much has subsidies not grown. It looks like they seem to have largely cancelled one another. Well, Ananth, will markets bother to react at all, or till this CSO puts its house in order, GDP will be one of the ignored numbers in the statistical table?
Well, Latha, the markets can't afford to completely ignore the GDP data. It's clearly a huge macro data. The headline number will be seen by the markets as the first thing that stares you in the face, and that's a disappointment at 7%. But I think some of the components are really positive to look at. Gross fixed capital formation at 4.8% that you mentioned. I think that's a huge positive. Construction at close to 7%. Agriculture at plus 1.9%. These are all nuggets which I think are reasonably positive. Clearly, the services sector is doing reasonably well as well. So, as Sajjid mentioned, if the government spending eventually shows up, as it seems to be with the fiscal deficit numbers, maybe there's a bit of catch-up which can happen later on. I think the overall story that the market will take away is one of green shoots continuing, but still a very, very fragile recovery of a small and slow base, requiring a lot of nurturing going forward. And probably the market will also see this as one more reason why the RBI can cut rates in this month in the credit policy. Of course, ceteris paribus, you've got lots of other things happening, including volatility in the FX markets, Fed, and so on and so forth. But just one more item which helps the rate cut theory.
Well, Ananth, I think the governor for once has given away his secret, hasn't he, at Jackson Hole, saying that he has not said that he's finished with cutting rates yet. When in the last 12 months have we seen the governor say that so clearly, so unequivocally? So that rate cut is coming, and I think Ananth summed up the mood beautifully. On several counts, it does look like there are green shoots. Manufacturing is a good number. Agriculture is not a bad number. Construction is a good number. Trade, and that's really a very large amount of services. 25% of the GDP is growing at 12%. That's no laughing matter. And it's growing on a good base. It was 12% last quarter as well. So we have to take a positive from that. Finance, insurance and real estate, not bad at about 9%. It's government that's not doing its job on two counts. Public administration number is bad. Government final consumption expenditure is bad at 1.1. And what is really terrible is electricity as 3.2. Why is it at 3.2? Because nobody is buying. So that's the next point at which the government has to concentrate, loosen up the purchase of electricity and ensure that more is spent by the government and quickly. We didn't get a very good railways expenditure number either. So that is the place where probably the government has to concentrate, and hopefully the government has already done that, because this is June numbers. The July numbers do seem to indicate that government spending is not as bad as it was until June. So looks like therefore overall it is not all that bad a comment on the economy itself. I think the worst comment is on the CSO for completely befuddling everybody. And learned economists whom I have with me are not able to understand why the difference between the GVA and the GDP should be 1.4 percentage points in Q4 and nothing at all in Q1. There better be an explanatory note from the CSO when they put out these press releases. This is completely befuddling, but hopefully we will have a spokesperson from the CSO to explain this enigma in just a minute. We'll wrap up this special edition, but we will carry on and try and explain this puzzle with someone from the CSO shortly. Shubhada, Soumya, Sajjid and Ananth, thank you very much for joining me in this coverage.